Hi everybody, my name is Martin McNichol, CEO of Gurus, and today I will answer the question, what is an ERP? So ERP stands for Enterprise Resource Planning, and as per Wikipedia, it is a management software that integrates core business processes of a company. So what does that mean? I mean, your company has all these departments or functions, right? Think about finance, marketing, sales, professional services automation or service delivery, warehouse and inventory management, shipping, payment, e-commerce. Now you have to do product planning, purchasing, even manufacturing. So think about a centralized software with all your business activities in one place, making it super easy for all of them to communicate and share information. This software tracks all of your business resources and facilitates information flow between all departments and manages connection to the outside world. With an ERP, you get a 360-degree view of all your business in real time, and everybody working with the same data, increasing productivity and reducing errors. Now, with the arrival of cloud computing, ERP systems have become more accessible to businesses of all sizes. Now, thank you for listening.
The very basic question is why Enterprise Resource Planning, also called ERP, is required. To answer, let's examine this typical business scenario. A client approaches the sales team to buy a particular product. The sales team approaches the inventory department to check the availability of the product. In this case, the product is out of stock. The sales team approaches the production planning department to manufacture the product. The production planning team checks with the inventory department for availability of raw material. If raw material is not available within the inventory, the production planning team buys the raw material from the vendors. Then production planning forwards the raw materials to the shop floor execution for actual production. Once ready, the shop floor team forwards the goods to the sales team, who in turn deliver it to the client. The sales team updates the finance department with revenue generated by the sale of the product. The production planning team updates the finance department with payments to be made to different vendors for raw materials. All departments approach HR for any human resource related issue. That is the typical business process of any manufacturing company. Some key inferences one could derive from the scenario would be: a typical enterprise has many departments or business units. These departments or business units continuously communicate and exchange data with each other. The success of any organization lies in its effective communication and data exchange within these departments, as well as associated third parties such as vendors, outsources, and customers. Based on the manners in which communication and data exchange is managed, enterprise software systems can be broadly classified as decentralized systems or centralized systems, which are also called ERP. Let's look at decentralized systems first. In a company with a decentralized system of data management, data is maintained locally at the individual departments. Departments do not have access to information or data of other departments. To identify the problems arising from decentralized enterprise management systems, let's look at the same business process again. The customer approaches the sales team for a product, but this time he needs the product on an urgent basis. The sales team do not have real-time information access to the product's inventory. So they approach the inventory department to check the availability of the product. This process takes time and the customer chooses another vendor, leading to loss of revenue and customer dissatisfaction. Now suppose the product is out of stock and the sales team approaches the production planning team to manufacture the product for future use. The production planning team checks the availability of the raw materials required. Raw material information is separately stored by production planning as well as the inventory department. Thus, data maintenance cost goes up. A particular raw material required to manufacture the product is available in the inventory, but according to the database of the production planning team, the raw material is out of stock. So they go ahead and buy the raw material. Thus, material as well as inventory costs go up. Once the raw material is available, the shop floor department suddenly realizes they are short of workers. They approach the HR, who in turn hire temporary employees at higher than market rates. Thus, labor cost increases. The production planning department fails to update the finance department on the materials they have purchased. The finance department defaults the payment deadline set by the vendor, causing the company loss of its reputation and even inventing a possible legal action. These are just a few of the many problems with decentralized systems. Some major problems with the decentralized system are numerous disparate information systems that are developed individually over time and are difficult to maintain. Integrating the data is time and money consuming. Inconsistencies and duplication of data. Lack of timely information leads to customer dissatisfaction, loss of revenue, and reputation. High inventory, material, and human resource costs. These are just some of the major drawbacks for which we need a solution. Well, the solution lies in centralized systems, that is ERP. In a company with a centralized system of information and data management, data is maintained at a central location and is shared with various departments. Departments have access to information or data of other departments. Let's look at the same business process again to understand how a centralized enterprise system helps overcome problems posed by a decentralized enterprise system. In this case, all departments update a central information system. When a customer approaches the sales team to buy a product on an urgent basis, the sales team has real-time information access to the products in inventory, which is updated by the inventory department in the centralized system. The sales team responds on time, leading to increased revenue and customer delight. In case manufacturing is required, the sales team updates the centralized database. Production planning department is auto-updated by the centralized database for requirements. The production planning team checks the availability of the raw materials required via central database, which is updated by the inventory department. Thus, data duplication is avoided and accurate data is made available. The shop floor team updates their manpower status regularly in the central database, which can be accessed by the HR department. In case of a shortage of workforce, the HR team starts recruitment process with considerable lead time to hire a suitable candidate at market price. Thus, labor costs go down. Vendors can directly submit their invoices to the centralized enterprise system, which can be accessed by the finance department. Thus, payments are made on time and possible legal actions are avoided. The key benefits of the centralized system are: it eliminates the duplication, discontinuity, and redundancy in data. It provides information across departments in real time. It provides control over various business processes. It increases productivity, provides better inventory management, promotes quality, reduces material cost, allows for effective human resources management, and reduces overhead while boosting profits. Better customer interaction, increased throughput, and improved customer service. Hence, a centralized enterprise management system is required. SAP is a centralized enterprise management system, also known as Enterprise Resource Planning.
So, what is ERP? And how can it help your business? ERP stands for Enterprise Resource Planning. Companies have relied on it since the 90s to streamline processes and improve data visibility around finance, project management, and manufacturing. However, the cost of ownership began to climb significantly, and on-premise ERP couldn't keep up with modern security demands or technology trends. So, ERP evolved to embrace the internet with new features and functionality. Enter ERP Cloud. The cloud offers a more affordable alternative for ERP because it eliminates the need for software and hardware or additional IT staff. ERP Cloud enables organizations of all sizes and across all industries to make significant cost savings, improve business insight, enhance collaboration, and increase efficiency. Oracle ERP Cloud is built for the digital age, delivering on the promise of the end-to-end process, visibility, and speed, all at a lower cost.
People are talking about business software. They're talking about it here. They're talking about it here. Are you ready for these conversations? This is Conversational ERP. The goal of our course is to give you the professional vocabulary that you need to participate in and contribute to these business conversations. Let's begin. Lesson 1. What is ERP? In the spirit of not taking yourselves too seriously, let's start with a quiz. Now, if you want a simple answer to the question, what is ERP? Here you go. ERP is a system that optimizes the flow of information, materials, and cash in an organization. That's just 16 words. That's pretty simple, right? No matter how sophisticated or complicated the individual business processes inside an ERP system get, they always come back to this definition. Everything an ERP does in sales, procurement, manufacturing, finance, or whatever, everything an ERP does, it does to optimize the flow of information, materials, and cash. We are going to talk about the business processes inside an ERP system in this course, but I have good news. If you have any knowledge of business, any at all, you probably already know a lot about how an ERP system works. Because an ERP system is just a model of a business. If a business performs a particular task, then the ERP system can provide an app to support that task. We generally don't make business apps unless they do something that people actually need. So, the study of ERP is the study of business. I'll show you what I mean because I'm going to draw an entire business and an entire ERP system on one single slide. Here's a business. Let's call it your business. Let's give you a CEO level view of what's happening inside your business. On the right, we have your customers. On the left, your suppliers. In the middle, in your business, you buy stuff from your suppliers, add value to it in some way, and then sell it to your customers. So let's look at the major business processes necessary to make that happen. Let's start on the customer side, and let's start simple. What's the one thing you want from your customers? You want an order. You want to capture your customers' orders in a sales order document. And once you get that order, you obviously want to ship it to your customer, and then you obviously want to send them an invoice, and then you obviously want to get paid. And maybe your process starts with a sales quotation before you get the order. Let's add in some arrows to show what's going where, and voila, you have an illustration of one of the major processes in business, the order-to-cash process. And you already understand this because you've done this a million times in your life, either at work or at home. So far, so good. More good news. If you understand order-to-cash, you already automatically understand another major business process, procure-to-pay. Procure-to-pay is just a mirror image of order-to-cash. Let's draw. Because you're buying instead of selling, you issue a purchase order instead of a sales order. Once you send that order, you expect to receive what you bought, expect to get an invoice for what you bought, and then you expect to pay for what you bought. And just like your customers on the customer side, sometimes you ask for quotations before you issue a purchase order. There's one other way for a purchase order to arise. Some businesses allow their people to create purchase requisitions. Let's add the arrows, and there's the procure-to-pay process. Your business will keep records of important master data as well, such as customers, products, and pricing, and suppliers, materials, and purchase pricing. So, how do these two major processes connect? Well, in two ways. One, via the inventory that you keep in your business. When you receive something from a supplier, you put it into inventory. When you ship it to a customer, you take it out of inventory. 2. Via finance. Your company will keep its financial records in what is traditionally called a general ledger. This is an old term arising from the actual ledger book into which accountants actually used to handwrite financial entries. In your business, the general ledger is used for both financial accounting and management accounting. When you think of financial accounting, think of the financial statements that you get every month, the profit and loss, the balance sheet, cash flow, and so on, and think of meeting regulatory requirements like filing your taxes. When you think of management accounting, think more of the metrics and KPIs that you use to manage the performance of your business. As you might expect, whenever you buy or sell something, you generate financial records that wind up in the general ledger. Most parts of your business feed information into the general ledger eventually. There are also specialized areas in finance. For example, accounts receivable, which manages the important task of sending invoices to customers and getting paid. There is a mirror image area on the procurement side called accounts payable, which accepts supplier invoices and pays them. And, as we've noted, these and other areas in your business feed the financial aspects of all of your activities into your general ledger. And with that, in just these few minutes, you have a simple diagram of the major transactional processes of a distribution business. And, by the way, a diagram of an ERP system for distributors. Now that's a good start, but what if your business did more than just buy and sell? What if your business was also a manufacturing business? What else would we have to add to the ERP system to support you? Well, we've got sales orders for selling and purchase orders for purchasing, so it only makes sense that we'd have production orders for producing. If you have a manufacturing plant in your business, then you use a production order to tell your plant employees what to make and when to make it. By the way, some people call production orders work orders. They're the same thing. The plant will take those production orders and execute them in order to manufacture your products. But they can't manufacture anything out of thin air, so they'll have to start by taking the materials they need out of inventory. This is called a material issue because the materials are issued from inventory to the production order. When they're done adding value to the production execution process, your people will put the finished goods back into inventory. This is called a finished goods receipt, to differentiate it from a material receipt you might get from a supplier. Just like in sales and procurement, your production team will keep records of important master data. The most important records are the bill of material and the routing, which tell the plant everything they need to know to produce a given finished product. In its simplest terms, manufacturing is like baking a cake. You need to know the ingredients, and you need to know the instructions. The bill of materials is just a list of materials that you need to make a finished good, exactly like the ingredients list. The routing is the sequence of steps that you perform to transform the materials into the finished product, exactly like the instructions. Virtually every manufacturing company in the world, no matter if they're making soup or airplanes or almost anything in between, everyone uses these two simple records to set up and run their production process. So now we have everything we need to run a manufacturing business. Or do we? Let's imagine you're running a manufacturing business. Here's what we need to do. We have to figure out which products to make, specifically how many of each, and when to have them ready in inventory so we can ship them to our customers. Then we have to figure out which materials we need to make these products, specifically how many of each, where we have to buy them from, and when to have them all ready in inventory so we can issue them to production. This gets a little tricky because each finished product could have dozens of parts, each of which probably has a different supplier and a different lead time. But all of these materials have to be in inventory before we can start production, or we won't be able to make our product. All we have to do is figure out the production orders to give to the plant, taking into account all the demand from our customers, all the supply from existing production orders and existing purchase orders, and all existing inventory of materials, work in progress, and finished goods, while spending the minimum amount of our limited cash. Let's take a moment and do a quiz. If I asked you, how should we figure this out, would you say A, with a pencil, a calculator, and a whole lot of coffee? B, with an Excel spreadsheet. C, my head hurts already at the thought of this. Or D, we could let the ERP system figure it out for us. And the answer is D. Yes, absolutely, we should let the ERP system figure this out for us. The heart, or more accurately, the brain, of any business is in its planning system. Every ERP system provides some kind of planning capability. It's right in the name, Enterprise Resource Planning. ERP grew out of, and still uses, an older planning capability called MRP, Material Requirements Planning, later known as Manufacturing Resource Planning. For now, we're just going to call it planning. So how does planning work? The planning system looks at all demands from customers, and sometimes the forecasts from the sales department as well, to figure out the total demand for each of our products on a daily basis, from today until several weeks into the future. Then it will look at each product's bill of materials to see what materials are required, and then it will check how much inventory we have. If we don't have enough finished goods to meet demand, and if we don't have enough materials to make those finished goods, then the planning system springs into action. The planning system knows where we buy each material, how much we pay, and how long it takes to arrive. So it can automatically raise a requisition or even a purchase order to bring in materials to meet our requirements. The planning system also knows when each customer wants each product they've ordered, so it can automatically raise a production order to tell the plants to manufacture all the finished goods we need to meet our customers' requirements. In simplest terms, the planning system will optimize your purchases and your production so that you don't have to figure it out by yourself. An ERP system can do this far more efficiently than you could ever manually do by yourself. That is the real genius of an ERP system. ERP does a lot more than just help you keep records of everything you do. ERP actively helps you manage your two biggest costs, purchasing and production, while spending the least possible amount of your limited cash. By the way, the manufacturing process we've been discussing is sometimes called plan to produce. And collectively, you're looking at the major processes of a core ERP system, and all on one slide, as promised. Let's circle back for a moment. We said that ERP is a system that optimizes the flow of information, materials, and cash in an organization. So where do we see these things on our diagram? If you look at the top third of a diagram, you'll see orders, sales orders, production orders, and purchase orders. An order is simply information, or as some people call it, a demand signal. Demand signal information flows upstream, from customers to your business to suppliers, and ERP systems are designed to optimize the flow of that information. If you look at the middle third of a diagram, you'll see materials, inventory being bought, manufactured, and sold. Materials flow downstream, from suppliers to your business to customers, and ERP systems are designed to optimize the flow of these materials. Finally, if you look at the bottom third of a diagram, you'll see cash, invoices and payments flowing into and out of your business, with records of everything flowing into the general ledger. Cash flows upstream, from customers to your business to suppliers, and again, ERP systems are designed to optimize the flow of cash. In summary, the next time that someone asks you, what is ERP, you can draw it out for them on one single page, and you can give them one simple answer. ERP is a system that optimizes the flow of information, materials, and cash in an organization. Thanks very much for watching.